Which banks are passing on the latest RBA rate increase to mortgage holders? We've seen NAB kick things off with ANZ and Commonwealth Bank following suit. We've also seen one of the lenders increasing their rate by 60 basis points, which is more than the Reserve Bank's actual rate increase. So we're going to look into that and see what's going on. We're going to start off with what's actually happened, followed by the market forecasts and expectations moving forward. And finally, we're going to look at which bank passed on what and what's actually going on. Let's take a look at what's actually happened. We know on Tuesday, the official cash rate was increased by 0.5% or 50 basis points, and it took the official cash rate up to 2.35%. Now, since then, we've had radio silence. None of the lenders wanted to be the first cabs off the rank saying how much of the cash rate they were going to pass on to mortgage holders, and also if they were going to pass on any to savers. We're going to dive into that a little bit later and see who's passed on what. The Reserve Bank increased the cash rate to combat inflation, currently sitting at 6.1 and set to peak at 7.8%, but effectively the Reserve Bank wants to get inflation back in the target range of 2 to 3%, and the way they're doing that is through the cash rate. They're wanting to reduce the amount of surplus cash available for consumers to spend, which will therefore stem inflation and bring it back down to the target range. So let's have a look at the market expectations. We'll start off with Philip Lowe's speech, the Reserve Bank Governor's speech on Thursday, where he mentioned they were paying close attention to various uncertainties, but also recognized that there are a number of developments that should provide helpful in navigating the narrow path. The first is that the supply side of the economy is gradually improving and demand for goods and services is stabilizing, which means there's a better balance between supply and demand that's been established. Many of the commodity prices have also reversed, and we're starting to see that things are moving in the right direction, and Philip Lowe expects that things will continue to do so. He also mentioned that inflation expectations in Australia remain consistent with the inflationary target. In addition, wages growth have picked up, but not nearly at the same extent as we've seen in the US. Let's take a look here at wages growth, and we can see the US is certainly skyrocketing in comparison to Australia. And this is an important difference. While there are some areas where wages are rising very quickly in Australia, aggregated growth in wages has not responded materially to higher inflation and is not consistent with inflation returning to target over time. It's important that this remains the case, and we would avoid the cycle of higher inflation leading to higher growth in wages, then higher inflation again, a cycle that would end in higher interest rates and sharper slowing of the economy. Since the Reserve Bank Governor's speech, Commonwealth Bank actually came out and said that the Reserve Bank Governor gave a clear hint to the pace of rate hikes moving forward. And they said that the Reserve Bank understands there is a lag period. We've seen Commonwealth Bank talking about this lag period where there's a 3-month lag between rate hike and it actually affecting consumers and borrowers. And Commonwealth Bank has maintained the view that the cash rate will need to increase by a further 25 basis points in October's board meeting, which will take the official cash rate up to 2.6%. And from there, they believe there'll be a furthering of 25 basis points in November, which will bring the cash rate to 2.85%, which is slightly off their previous prediction. They were saying that the official cash rate will get up to 2.6. Now they're saying 2.85. We can see there's a few banks still saying they believe that the cash rate will get to 3.35%. Commonwealth Bank still of the view that the Reserve Bank will cut interest rates by 0.5% in the second half of 2023. And if you find these videos useful, hit the subscribe button down below to keep up to date with all things property and finance. Let's take a look at the market expectations. We can see in October's rate hike, the market is expecting a 31 basis point increase, which actually means the Reserve Bank is likely to increase by at least 25 basis points. There's probably about a 75% chance of that happening, or up to 50 basis points. That puts it at about a 25% chance of a 50 basis points increase in October. Let's have a look here at November. Same thing here. Let's assume in October there's a 25 basis point increase. The expectation for November's rate rise is down to 30 basis points, which actually puts an 81% chance that there will be a 25 basis points increase in November and a 19% chance of a 50% increase. Now, with December, assuming there's a 25% increase in November, the expectation is also down for December for a 21 basis point increase. So that puts it at about an 85% chance that the Reserve Bank will increase the rate by 25 basis points come December, and 15% chance of no rate hike at all. So we might actually see an early Christmas present where the Reserve Bank might not move rates at all. We can also see the implied terminal rate. So we can see the money markets are expecting that the implied terminal rate will be just under that 3.6%, a little bit under Commonwealth Bank's prediction, which is 2.85%. Westpac ANZ, they're saying about 3.35%. So it gives us a good understanding of where their markets are really benchmarking the rate. And looking at the cash rate and implied futures yield curve, as of the 9th of September, we can see how that has really changed the expectations over time. So we can see what one day does in the grand scheme of things. So the markets on September the 7th, we're expecting the cash rate to be a bit higher than what they are now. We can see that the markets are consistently changing their forecasts and anticipation of where rates will go. But it is widely expected the cash rate will get in around that 3.5 percentile mark and then stay there for a little bit of time. Commonwealth Bank, as we know, is predicting rates will come down in the middle of 2023. It will definitely be interesting to see how this all plays out. And what do you think? Leave a comment below if you have a feeling that rates are going to keep going up. Are they going to get up further than the 3.5% we can see here that the markets are predicting? Let's take a look at which banks are passing on the latest RBA rate increase to mortgage holders. NAB kicked things off. As we can see here, NAB increased the official cash rate by 0.5%. There was one lender that actually increased their rate by 60 basis points. We'll get to them in a minute, but we can see here NAB saying that they're going to increase their rate by 50 basis points or 0.5%. And that's across all their loans. So interest only, principal and interest, investors, it doesn't matter. If you've got a loan with NAB, your rate is going up officially by 0.5%. Now, this is actually going to be effective from Friday, the 16th of September. So if you have a loan with NAB or you've applied for a variable loan with NAB, you are going to find that your rate is going up, and that's going to have an effect on your mortgage repayments. We'll dive into what Commonwealth Bank and ANZ have done, but let's quickly have a look at what it actually means for your mortgage repayments. Let's say you have a $600,000 mortgage paying 4% at the moment. Your repayments per month are about $2,864. A 0.5% increase brings your rate up to 4.5% and actually increases your loan repayments per month to $3,040. That's a difference of $176 per month. It actually makes a big difference because that's only 1 month's increase. So every month that we've seen is going to have a similar impact. We've seen 5 rate hikes in as many months, and that's all hitting the bottom line for mortgage holders across the country. Commonwealth Bank also came out saying they're going to increase their rate effective the 16th of September, and they've said a similar story to NAB. They're going to increase their variable rate by 0.5% effective the 16th of September. And that's for all variable loans. So if you've got an interest only, a principal and interest loan, an owner-occupier investor, all their variable rates are going up by 0.5%. Now, Commonwealth Bank was actually the most generous bank for savers. They increased their savings rate for customers, where ANZ, NAB, they haven't said anything yet. So it'd be interesting to see what happens here. But we can see here, Commonwealth Bank has increased their rate, as well as ANZ. ANZ increasing their official variable rate by 0.5% as well. Same date, they're effective on the 16th of September. All their loan interest rates are increasing by 0.5%. If you're on a variable loan with ANZ, Commonwealth Bank or NAB, all your repayments are going up. We can also see here, Westpac hasn't said anything yet. We saw Bankwest, Macquarie all coming out saying they're going to pass on the 0.5%. Still no word from ING, Bendigo, St. George, Suncorp, and Bank of Queensland. And going on to the bank that is passing on 60 basis points, and that's Firstmac. It's unbelievable. They're actually passing on 60 basis points, which is higher than the Reserve Bank's increase. So they're passing that on effective the 9th of September. And if you do have a home loan with them, it actually might be worthwhile reviewing, especially given the latest news. Also, if you've had your variable rate for a little bit, we've seen 5 rate hikes. If you're paying in the 5% or even high 4s, it's definitely worthwhile reviewing your mortgage. There's banks out there that will give you refinance rebates. You can also get your variable rate down by nearly up to 1% at the moment, which will save you a bucket load of money. In that example we talked about earlier, where you've got a $600,000 mortgage, 1% off that variable rate would actually save you $6,000 per year. Plus, lenders out there are giving incentives. You can get $2, $3, $4 grand to refinance refinance to them. So hit us up at huntergalloway.com.au, call us on 1300 088 065, hit the free assessment button, we'll do the rest and be able to assist you. There's no cost, we take care of all the details, and as always guys, thanks for watching.